There was a survivor in the rubble of Lehman Brothers. Neuberger Berman, money management firm Lehman had acquired in 2003. Neuberger Berman's employees bought back control from Lehman's creditors, and now their 70-year-old firm is independent once again, running some $170 billion in assets. Joining us this morning for an exclusive interview, Neuberger Berman's president, Joe Amato. Joe, very glad to have you here.
Great to be here.
Let us talk about the challenges that you faced in making this firm independent once again. There were a lot of doubts internally, surely, with Lehman stock plummeting into September of last year. How did you get this firm back on its feet? If not back on its feet, because it continued in operation the whole time, but back independent, back thriving once again?
Sure. It was certainly a very difficult time. However, I think the long-term franchise that Neuberger Berman has enjoyed for 70 years, having been founded in 1939 by Roy Neuberger, allowed us to really continue through that process with great confidence from our employees.
And how did your clients respond? Clearly, the Lehman situation was an awful distraction, but you've got a lot of long-term clients. What kind of attrition did you face, and how did you bring them back into the fold, or at least reassure them that Neuberger Berman was the place that they still wanted to invest their money?
Sure. I think the long-term franchise really helped because people saw us invest successfully through lots of different periods and volatility in the market. So we had our money managers really focused on looking at the markets and figuring out how to invest in those volatile times and communicate with our clients very regularly about the ability to get through this whole process with Lehman Brothers and survive.
Well, speaking of investments, we know most of the people who are with your shop are pretty conservative, but we had Mark Faber on yesterday, obviously always an extreme point of view. He says holding cash and a lot of fixed income products is just as risky right now as holding equities, commodities, and real estate. Do you agree with that?
Well, I think that the long-term focus that we have had over the years, we look for a diversified asset mix for our clients, what we recommend to our clients. So certainly having an element of cash or fixed income instruments in your portfolio makes sense, given the volatility that we've had and we've seen over the capital markets over the last year. So Mark is a very experienced investor and very successful over the long term, but we'd stack up our track record, and we think we have got the right asset allocation mix.
Are your clients anxious, though, saying, hey, maybe we're losing out on price appreciation? Maybe we're losing out?
Well, if you look at the allocation that we currently have for our individual portion of our business, we've got about 70% of the mix in equities. And again, our focus is the long term. So given where we are in the cycle, we think that's a prudent mix. But we also have 30% of our client assets in fixed income related instruments to diversify and dampen down the risk a bit.
Joe, talk to us about what your clients are doing, because we hear so much about the money that has flowed into bond funds this year, both treasuries and credit. We hear about the wall of cash that's out there waiting to dive into something, whether it's credit, treasuries, or equities. What are your clients doing? Do you find that they're still a little bit conservative, not so tempted perhaps by the equity risk?
Sure. I think there's definitely a hesitancy to jump back fully into the equity markets. And I think anytime you've gone through what we all experienced in the equity markets from middle of 08 through February, March of 09 would give anybody a level of concern. But we do see over the course of 2009 an increasing willingness to invest in the equity asset class. And in fact, that has played out because the returns have been quite strong.
How hard is it right now, do you think, to compete for people's money or their attention versus, let's just say, a BlackRock, a PIMCO, a Fidelity, some other well-known brand names?
Sure. As I keep reminding our folks, nobody's feeling sorry for us, nobody's giving business away, so we are competing very hard for the business. However, given our long-term track record of success, we've had good support from clients, and in our first full quarter post the spin-off transaction from Lehman Brothers, we've seen a net inflow of assets consistent with the best-in-class operators.
Have you had to really send out, though, your sales teams, your marketing team? I mean, how aggressive has this push been for you? I mean, how much more effort and energy have you had to put into getting your clients or keeping your clients?
Our people were very excited about actually getting out once the transaction was completed. We went through a period of sort of limbo period until we completed the transaction in May. Once that happened, our people were very excited about getting out there and telling the story, because I think our story resonates well with clients. The fact that we're independent, employee-controlled, have had a long-term track record of success, and a stable franchise over the years.
Joe, we've only got about 30 seconds left. How are you running the firm differently now than you did when it was part of Lehman?
As part of Lehman Brothers, we had more of a push to grow the business. Being part of a large organization like that, that's That's what the direction was, if you will. Now our focus is totally on performance and growing our business as a byproduct of good performance. So as an employee-controlled independent company, our interests are totally aligned with our clients, and I think that bodes well for the business going
forward. So if it didn't make sense to take in an extra $100 million of assets, you might not do it.
Performance is paramount. That's what we're focused on most significantly.
Joe, thank you very much for joining us. That's Joe Amato, president of Neuberger Berman, an exclusive interview right here on Bloomberg.